And now for the non-farm payrolls preview. The US jobs report, it's the last for 2016. Yes, I know we're in 2017, but the report is for the month of December, the last one for 2016. So, in general, it feeds into the Fed meeting in February 1st. So the Fed will not have more NFPs in its next decision. We're not expecting the Fed to raise rates, okay? So it's not going to be such an important decision, but it might shape their tone. It'll serve as what Trump received from Obama. Trump gets, enters the Oval Office, becomes president on January 20th. So we'll have the January will be a mixed month. I mean, mostly Obama, but Trump will already be in office. So this is sort of a conclusion of 2016. And in general, it's expected to maintain the trend. Let's see what we're expecting from Friday's NFP. Jobs, well, the headline figure is expected to show 175,000 jobs, very, very similar to last month's 178,000, okay? The unemployment rate, also expected to be similar, small bump up from to 4.7 from 4.6. This will probably be only, politically relevant, probably irrelevant. The elections are already behind us. Wages are, in my opinion, the most important part of this release this time, because last time they dropped by 0.1%. That was a disappointment. They were predicted to bounce now by 0.3%. But perhaps the more important thing is year-over-year wages. Last time it disappointed with 2.5 year-over-year. The peak was 2.8. So these two figures are quite important. Let's take the baseline scenario. Markets currently love the dollar on Trump expectations. Remember, Trump is expected to provide some fiscal stimulus. Markets are not worried about trade wars. 120,000. Remember, expectations 175,000, but I would say 120,000 should be enough to support the dollar. Wages, again, are more important. 2.6 will be good enough. Even 2.5 could be okay. Okay? And in this scenario of mediocre job gains, mediocre wages, the US dollar could continue gaining steadily. Okay? The NFP could be just behind us. Sorry for that. Will just serve as an excuse to. Sorry about that. Noise. Anyway, so the US dollar could continue gaining just having the NFP out of the way. Okay. Now let's look at the darker scenario. If we have a big disappointment, what would that look like? That would look like under 120,000 jobs gained, especially if it's only double digits in the thousands. Okay, under 100,000, it would be negative. Wages, a slide under 2.5 will certainly be worrying. It would be a setback. It would be the second month of stagnating wages. In this case, the US dollar could fall in the immediate aftermath on Friday, but it could resume its rises next week, in the middle of next week, after the dust has fully settled. Okay, so that's a negative scenario, but really it would need to be quite negative. And now let's look at the positive scenario, the bright one. So this one, we're looking at job gains of over 200,000. Okay, remember that was the magic number, at least in 2013, 2014, also in 2015. And if wages are 2.8% up year over year, and especially the magic number of 3%, so these two magic numbers could accelerate the US dollar's gains above 200,000 in jobs gained and above 3% in wages. So to conclude our NFP preview, watch out for wages, more important than the headline number. The US dollar remains in the driver's seat. Key numbers in the NFP, in the headline figure, would be 120,000. Below that would be a disappointment. Above that will be good enough. Or in 200,000, above 200,000 will be really spectacular. And wages to watch, sort of the mainstream range is 2.5 to 2.7. 2.8 and higher is perfect. And under 2.5 would be a disaster. Okay, so that's the big event for Friday. Again, trade with care, lower your leverage. These events tend to create high volatility.